Okay, I think we're good to go. Again, welcome those of you on socials. Nice to have you with us for Trading Buddies on this Monday. This is the last Monday in April. Let's get stuck in, shall we, and see what's about the place. I better update you guys on looking at gold. Wow, double top, lower high at resistance. Interesting. I'm a seller of gold. Now I've just noticed that chart. Interesting. All right, let's go to the hourly chart because that's where we seek to find a breakout as we go into the London session. A breakout of Asia session. Look where we are. We're sandwiched between DS1 and the two pivots weekly and daily, which often at this time of the week are sandwiched together. That is certainly the case this week, and it does tend to be a bit of a magnet to price. Interesting that our entry would be just below those pivots, which would scare the bejesus out of me if I were to place an order long here. The order short, however, looks quite good, given that I've got a takeaway. Hi, Linda. How are you doing? Good to have you on board. Given that volume a little soft. Okay, that's interesting. And I'll see if I can fix that. Maybe that's a little bit better. I'm more on the microphone. Is anyone else having trouble with audio? If that's the case, let me know, please. But as far as I know, everything looks okay my end. All right, so are we going to trade this breakout today? And for those of you who don't know, welcome. Those of you who are here for the first time, by the way, be it on the socials or in the room. We've got that problem of trading straight into those two pivots, which should act as resistance, at least for a short period of time, if not long enough to take price back and take out our stop loss if we were to go long here. If we were to go short, as I said, I think that's the preferred option, but we don't get an option. It's a one cancels other trade. So we place the position and then wait for it to hit our target or our stop loss. I'm inclined not to take this, given that the proximity to the two pivots here, as I say, which should act as resistance, if only for a brief period of time. But I do like the short. The short makes perfect sense to me. We're going to leave it alone. It is Monday after all, but I do like the downside for gold at the moment. All right, now, those of you who were in last week, my trade of the week was Euro versus the CAD. Goodness gracious, what a mess we made of the world. Didn't make such a mess of the trade, and I'll explain that to you. Those of you who are in the Slingshot group and get my trade updates and my trade signals will have taken advantage of the management that I put in place here. Now, we traded this bar here. Actually, we traded the inside nature of this buying bar, which failed to go on with the job. So our bias was short. And what we anticipated was that price would break through here and attack these this support area. That didn't happen, of course. There was a news event that drove price. I'll go to the daily. There was a news event that drove price back up here. Our stop loss was way up here, so no damage done. But what I did do on Thursday, I think it was, I looked at the 4-hour charts and saw this, which was coming through here. I better go a bit wider so you can see there we are. Trade line started here, went through here, giving us a clear false break of not only the trade line, but also of the pivots here. Now, the pivots are a little bit different because we didn't close above the weekly pivot there, but we did close above the trade line and we retested it. As soon as I saw that, because we're in drawdown as well, I thought here's an opportunity to get safe in this trade and erase any or most of the loss that would have taken place had price continued going up to our stop loss. So I actually brought my stop loss down to here, or about here somewhere actually, and I took an entry here and put my take profit just below the trailing stop loss, which actually meant that when that did get hit, I'd made money on the 4-hour chart, and I'd reduced my loss on the weekly chart, which may not still be a loss. It could still be a winner, but I'm out of that trade now for break even. So we won on the 4-hour, and we were prepared to take a loss on the weekly, cancelling that out. So a non-event at the end of the day. If you were still in that trade, which if those of you who followed it and actually took the position, could well be because you wouldn't have had that trade management courtesy of my Slingshot trading group. I think you're still in a good position. On Friday, this candle here set up. Sorry, on Thursday, that was Thursday's bar. And then on Friday, you got this beautiful sell-off. Had you been alert and traded that one, which I did not, of course, you would be now in a reasonable position and looking strong to pick up this weekly again. I'm not going to re-enter now because I've missed that entry there on Friday. What I have done, however, 2 new trades this week, thus far anyway. I've got a buy set on Aussie versus the Swissy. Now, the premise of this one is there's a big reward available, potential big reward available here if we get this right. Now, I could have entered above the bar, which is Friday's bar, sorry, last week's bar. Friday's bar, of course, was a continuation, 1, 2, 3, 4, 5 days, 6 days, potentially now in a row. I didn't want to do that, but what I have done is set a limit entry order at this level here. Why? Well, because I think this level here, or you can see the high here, wick rejection here, I'm anticipating that we will get a bounce off that level. Now that level, if you wanted to follow it, is at 0.5935. So I'm a buyer of Aussie Swissy at 0.5935. The stop loss is simply underneath the weekly bar and well out of the way of that low. And of course, underneath the monthly pivot as well, which will not be there, I wouldn't think, if in the unlikely or unwelcome event that price comes back all this way, it won't be there. It'll be up here somewhere. So that will be protecting our trade as well if we get triggered into it. So Aussie Swissy long, I am keen the Aussie for some more upside. You can see that beautiful retracement on the initial breakout of these lows. Low, 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 higher, high, higher, low. I see no reason why this can't continue, and that reversal will play out. Now, the reason I think this is a great opportunity is because you can see this rejection area here as well. It doesn't want to be down here. Does not want to be down below 58 or the 0.58 mark. If this does reverse, we've got plenty of opportunities to take profit up here, and we can build a position and get a fairly decent result. So I think the risk that we're taking here, which is not so big, is very much a great risk to reward trade. The stop loss I have is 116 pips below 0.5935, so it's 0.5819. And my first take profit is about what, 1 3/4 above that at 210 pips, which will be 0.6145. Yes, 0.6145. There I'll remove 1/3 of the position, and I'll move my stop loss 70 pips from or below my entry. That will give me effectively a no lose situation, even if this did reverse. So it's Aussie Swiss long on the weekly. The second position I've taken, and don't forget that's a limit entry order there at 59.35. Second order I've taken is Kiwi CAD short. Now this is a weekly position, sorry, a weekly setup, but I've taken it on the daily chart. Same thing really, because I've got my stop loss well above the weekly candle. But the entry is a little bit different, where normally I would enter underneath last week's bar, actually entering underneath Friday's candle. So nice little double wick rejection there, or I suppose you could call it a tweezer top. On a smaller time frame, it would look like a top. It's rather intermediate, but it is rejecting this former support level, and that does look like resistance to me. So the entry for that one is 0.8105. I've got a stop loss at 0.8185, and I'm anticipating that will break this low. I'm hoping that's the case anyway. I may have to withstand a bounce off well, what effectively is a double bottom, but certainly that trend line as well. My first take profit is going to be pretty much one-to-one by the look of that, at 0.8025, and I'll remove 1/3 of the position, anticipating that will come down and have a look at these lows, and if that's the case, that'll be a decent trade as well. I think the Kiwi's still weak by my reckoning, and I'll have a very, very quick look at why I think that's the case. We'll get off the technician's 2 cents worth and go to the currency indexes, which I don't think I've got there either. I'm looking at a poker machine. Aristocrat Leisure. I've got a trade set up on that one as well. I don't know if I'll share that with you. But let's have a look at the currency indexes. The dollar still hovering at the high of this breakout candle. Well, really, nothing's happened since we did break out of that wedge pattern. And I'm anticipating that we will get a continuation at some stage, when I'm not too sure. We do have the Fed, of course, this week, and I would suspect that this time on Thursday, we certainly won't be where we are now. What the Fed does, who knows? The problem with the Fed coming up, I guess, is that it's uncertain how the market will trade into that. I'm anticipating that eventually we'll get a move on here, but I'm not sure it's going to be before the Fed on Wednesday overnight for most of us. Euro, on the other hand, pretty clear to me that we broke this trend line. We retested it, and we anticipated that would be the case where we've sold off. We've now got a support level that we've done exactly the same thing to. We've broken that support level horizontally, and now we're rejecting that as a resistance area currently. So I'm still bearish the euro. Aussie bullish because, and we mentioned this 2 or 3 weeks ago, where we saw this tweezer bottom sitting on this support trend line, but also at a former support horizontally. Got a nice pullback in order to get into that if you so chose, and now it does look as though it wants to go higher. It's having a little bit of a struggle getting through this former resistance area, but I'm anticipating that that will be the case, and this looks like a target area up here around about 67.70 odd. So bullish the Aussie. The Kiwi is a little bit different, has broken the support and now retesting it, potentially rejecting that as well. So I'm bearish the Kiwi, or certainly more bullish the Aussie than I am the Kiwi. The yen, well, we spoke about this all time. Well, not all, it probably is all time actually. I haven't checked on that. Whether we could bounce off this level. Of course, the whole world was waiting for that to happen. It didn't, as we've seen, and it just continues to fall into the abyss. Amazing, amazing, amazing. The yen is just worthless, it seems. Canadian dollar, not dissimilar to the Aussie in some ways, and those ways are we've got a very, very strong box range in here. We did anticipate that we get a bounce off the bottom of that once we hit it. All happened in a day, actually. And now we're struggling to get through this former support level. I don't know how strong that support level is, but I anticipate the CAD will at least challenge this trend line at some stage, even if not this week, maybe even next, but potentially this week. So I'm hawkish, the CAD. I don't know that I'm full on bullish, but I think it's far better than a couple of others. Swissy at a support level, horizontally, as you can see, fairly strong, but like the euro, has broken through the support that I call the bottom of my channel, and that has retested that, rejected it to a degree, having a little bit of a struggle continuing this downside. But I think the downside is where I'd rather be on the Swissy. And the pound had a good week last week. The pound bouncing off the bottom of our wedge pattern. I suspect that we probably have a look at that, the underside of that trend line one more time. But I'm not bullish the pound. I'd rather stay out of that. So summarising all that, I still think the dollar's got strength in it, but the Fed may hold that back until the announcement. Aussie looks to be the best on the chart at the moment. Had a very strong week last week. Kiwi, I'm not even going to mention the yen. I'll just keep that out of all my calculations at the moment. The Kiwi, I think, is weak. So Aussie, I'll stick to the Comdols. I think the Aussie's the strongest of the Comdols. The CAD's next best, and the Kiwi brings up the rear, if you like. So if you want to mix that up, Aussie against the Kiwi, or Kiwi versus the CAD short, which is exactly what I've done. As I said, I chose the Kiwi CAD short rather than the Aussie Kiwi long, because the Aussie Kiwi long appears to be at a bit of a resistance, or close there too, closer to a resistance than is Kiwi CAD close to support. So I chose, pardon me, Kiwi CAD short rather than Aussie Kiwi long. Apart from that, I better shut up for a bit and say good day to Ash. Good day, buddy.
Hi, mate. How you doing?
I'm okay. Yeah, looking okay.
I'm just listening in because well, we've been pretty much in agreement for quite a bit of it, and while I was listening in, I just thought I'd better just double check some of the seasonal patterns that you're kind of looking at, and some of the COT data that you're looking at.
How did I go?
You did well. You did very well. I mean, I will tell you now that the Kiwi particularly is about to hit a very, very weak seasonal period. However, that is also true of the Aussie. So maybe sort of 50-50 on some of it. Yeah, but the Aussie is kind of if we think about where we use kind of some of the off chart indicators, if I think about seasonality and I think about the COT data, then the seasonal data is very, very weak for the Aussie and the Kiwi, but the COT data is very strong for the Aussie. So that kind of balances that one out. And you could say either there's no trade, or if there's a technical setup, I'm going to take it, because there's nothing really sort of like suggesting that I should be on the opposite direction. So really, with the Aussie, I think it's almost fair game. With the Kiwi, COT data is getting a little bit better, but it's just, if anything, it's a little bit bearish on the Kiwi, and of course the seasonal data is very, 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 very weak, kind of coming up to a very weak period. The Canadian dollar is very strong with the COT data because it's at an extreme. This is what we're looking for. When I look at the COT data, look at the extremes, and it's the pendulum swings. And it's not a timing tool, but it's suggesting that everybody's on one side of the boat with the CAD, which is on the sell side, which means that the kind of buy side is on its way, relatively soon. So the Kiwi CAD seems pretty good to me. I mean, I can tell you the other one that I'm really interested in, and I've taken a position in, which will probably you may well scoff at this and tell me I'm an idiot, and you probably on most occasions be absolutely right. But I'm hoping you won't be this time. It's the yen. So I've taken a position short on the euro yen, because if you look overnight, I mean, I've been after this time, mate. And the amount of times I've been run over, I feel like it owes me. So I've taken a position on the
Actually,
euro yen
it's
short.
interesting you should choose that, because I'm going to show you something in a bit, that I placed an order euro yen last week.
Oh, cool.
I'll show it to you. I
Yeah,
cancelled it, but
you
it's
cancelled it.
interesting.
Okay. Well, I mean, this is the picture on the weekly. This is what we got on the weekly. We got this channel that we've sort of like, we've cruised up. We've got, and it's a almost an unarguable top end of the channel. We can sort of like sit here for a long time and go, you've got trend lines, you've got trade lines. Is there a trade line there because you got more
Do you want to show your
touches and all
chart,
this
mate?
sort of? Oh, am I not sharing?
Oh, hang on. I'm sorry. I'm looking at the wrong thing. You probably are. Yes, you are. Sorry.
Okay, so we got this with this potential trade line. I guess you got the channel here. You got touch there. You got touch there. Touches along here, and we got this point here. However, if we just sort of like go, well, let's just go to the highs. There's not as many touches, but let's go to the highs. It does lead us here. It leads us here, and look at the overnight bar. Look at that on the 4-hourly. I mean, it's just it's so aggressive that you look at that and you think, okay, this thing's now ready. This thing's now, when it comes down or not, fine, but this thing's now ready. If this takes out this top, I would say forget it. It's just the bar is so strong, and it's a 4-hourly bar. So really, it would be better if it was a daily, and it might well result in a daily, or it'd be even better if it was a weekly. Now it's not going to be a monthly. I don't think. Well, it could be. It could end up being a monthly bar. If we end up down here somewhere by tomorrow, this is going to look incredibly bearish. So it looks pretty good. Now, the reason for the trade in the area is the daily pivot. I don't love it there. I've got to be on. Yeah, I mean it's a first point of contact. That's all I see it as. I'm in.
Oh, you are?
No, I'm in. Cool. I'm in. Yeah, I'm in. But I don't love it though. If I'm honest, I'm going to add to the position if I can get it. And the reason I'm going to add to the position is that there's a very, very small and ridiculously short-term trend line just along here. And if you were to pull in a fib as well, then that kind of like starts to suggest that we may well get to this area. So I'm adding here and I'm adding here. But I had to take this one because there's a 38% retracement plus you've got the daily pivot. So the first one was not my
potential reward is ridiculous.
Well, the potential reward of this, if we believe the channel is the support and resistance zone that will be tested, of course, it's not that's not support and resistance. It absolutely is. But will it be the support and resistance zone that's tested? Because of course, this could come down to this horizontal level and reverse. It could come down to this trend line here and reverse. There's a few things that could happen. But if this ends up low tomorrow, because of the longer term time frame aspect to it, the monthly, that will suggest that the channel is actually probably quite shallow, and we could come down a lot further. So yes, if we can get the channel, then we're looking at around about a 4-to-1, which is okay. If we can get in a little bit higher, then we're looking at much better multiples. So even though I'd quite like this to go and keep going and get stops at break even nice and quickly, it would actually serve me better if it didn't, if it just came back a little bit and then went, because then of course the multiples will be even better. So that's the trade I'm currently in. I'm currently in that. But also the other one that I'm in, which I'm surprised you didn't mention this week, and it concerns me a little bit that you didn't, because maybe I'm not right on it, but the pound, the pound CAD. The pound CAD that we discussed last week. Now, you had to plump for the euro CAD because of price and the lack of value. But I've also got a pound CAD short on because, again, COT data for the CAD is very, very strong. Now, COT data for the yen, incidentally, really strong. I mean, you can't get stronger for COT data for the yen. They've all basically sort of said, we are going to be buying this thing anytime soon. This thing can't continue to go down. Now, anybody that's kind of thought that to this point has been run over. But the COT report is saying you've got to buy this thing. So that's the first thing. Seasonal data on the euro yen in May, very, very weak. So you've got kind of two aspects now that are suggesting that we should be looking for the euro yen short, along with some others. Obviously, the Kiwi yen would be another prospect, and maybe the Aussie yen, but the Aussie with the COT data is not quite as in agreement. But Kiwi yen would also be a good one short. The fundamentals problematic because last Friday the BOJ had a chance to come out and say we will intervene because the cost of the yen, the price of the yen is ridiculously cheap. We will intervene, and they didn't. So the fundamentals aren't particularly solid for the yen. However, this is where we attempt to front run what could happen this week. Now we got CPI data. We haven't got a particularly hugely in-depth information from Japan this week, which could well be in our favor. Because last week, while I was trying to trade this one short, the Bank of Japan anticipation firstly, and then the eventual statement just run me over. It was just like they didn't play ball, and I was anticipating. I was trying to get out in front, and it failed.
Same.
Now this week, what I'm looking for to get out in front of is CPI data from the Eurozone. And that may well fail as well. And that's what we've got to be aware of. We trade this thing short. We've got to recognize that probably the crux of this in the front end of the week is to do with inflation, and it's to do with inflation in the Eurozone. If inflation in the Eurozone starts to diminish, this thing is going to go, I would suspect, I can't say for sure, of course, but I would suspect this thing is going to just drop like a, well, you're better at metaphors than I am. What would it drop like?
A waterfall.
A waterfall. You normally say about somebody's pants, but so this thing's going to drop like a waterfall. I think this is coming down hard if the CPI data comes in weak. So we're relying on that. We're trying to front run it, but it's well worth trying to front run things if price is good and the charts look correct. There's a few things in line. We've got COT data in line, seasonals in line. Potentially now we see the 4-hour bar that looks bearish. So we're going to try and front run it. But we are going to be reliant on Eurozone inflation data coming in weaker than expected. And if it does, I think it will fall. And the reason I think it will fall hard is because the ECB have come out and suggested that they are keen to lower interest rates, but the data isn't there yet. A decent drop in CPI will put them back in line with that happening. And I think there's a chance. There's always a chance that can happen. We haven't seen that from America. Now, the other one I was interested in, as I said, was the pound CAD. Now, the pound CAD didn't really go anywhere in the end last week. It hit the area of resistance, and then it reversed again. But it's actually holding on here, and it's relatively close to my stops. I'm not sure whether this one is going to work out. And we've got the Fed this week, so we might be waiting. And I might not take. Really, it probably would have been better to in fact, not better, because the setup's absolutely fine here. We got a break of this trend line, and we are kind of in and around this area. But there's obviously the monthly pivot there that might well get stretched, but that puts it back inside the trend line, which I'm not particularly keen on. But it's just not playing ball.
It's interesting where you place that trend line, because if you go up to the next swing low, then that changes.
This one here.
Yeah, it changes the picture dramatically. No,
I suppose in there.
The start of the trend line, not the.
Oh, I see what you mean. I see what you mean. Yeah, you're right. What there?
Yeah.
Yeah, it does, doesn't it? It does. Thing is, though, there's one down here. If we sort of like come right the way back, well, actually, it's even further down, isn't it? That's if we look at that, I mean, these are the two lowest points, if you like. Then that does also put it under the level. And also you've got a weekly position from a couple of weeks ago, which is broken through here. Well, it hasn't really taken out this low, the low end, but it's closed. It's gone below the close. And then if we look at last week's kind of bars, this is a pretty good looking bar for a sell.
Mm-hmm. Mm-hmm.
Inside bar, inside body there, which isn't so good. So anyway, this thing will either be a really nice kind of setup and work out, or it's going to end up actually running me over. And I don't think I'll take it on again, even though I've been after the yen and I've been after the euro yen and been happy to kind of chase that one. The difference with this one is that COT data is really strong, but it's not as strong. And also the fundamentals with the pound, they're kind of, they're not as in truth, I actually think that this could run off the back of CPI data from the Eurozone as well. Because if CPI data from the Eurozone is coming in weak, that would suggest that we might actually get some kind of a connection with what's going on in the UK because of the regional, neighbouring aspect of the country and the two regions. So I think the CPI data might have to actually play a part in this one. But I've gone for it, and we'll see what happens, mate. But in truth, the fact that it's come back in the way that it has doesn't really fill me with too much. And I'll show you something else. Another reason I don't particularly love it is because there is a tiny little trend line here, which has now been retested, and price is above it. So I'm not going to feel comfortable with this until price is back below this trend line. I took it again at the daily pivot, as it opened this morning, but it's not looking great. So we will see what happens with this one. But
the reason I didn't include it was, I think we've just given a case for either way, really. But that's not the reason. The reason was because I had a look at the currency indexes, as you saw, and I thought the pound had bounced and was ready to go to the next resistance level.
Yeah.
And I also saw that oil was almost back inside my trading range and potentially headed short, which is surprise at the end of the day. So I kind of steered clear of it. I agree with everything you've said, and I agree that it's failed to take out what was the setup that I liked last week. But they're the two reasons that I thought, I think there's better value somewhere else.
Yeah.
I'm not saying it's a bad trade, but it kind of steered me off it. That's all.
Yeah, well, it's not looking great right now, and the question really I've got with this sort of thing is that sometimes editing a trade, like coming out here, is going to lose me half the position, which is fine, but you do that enough times, then you're ended up sort of you're down anyway. So sometimes it's better to let it hit stop loss and say, well, I was just totally wrong. Because the problem is you close a position here, it comes up, comes down again, wouldn't hit a stop loss, and you're sort of it's costing you to continue to enter the position that if you just left in the first place, you'd still actually be in the trade. So I don't like this. I've got to be honest. That break and this bar looks pretty good. And when we're looking at an hourly bar here, this bar looks pretty good. But the longer it sort of stays above here, the worse it is. So I may well edit it in as much. I might bring my stops tighter, just as a bit of a safety, margin of safety, and I'll save myself a third. So that's something that I might need to do. I might need to edit this out a little bit, but so far, price is in between this kind of range between this point and this point, and it's not particularly good looking. But it could still come under here over in the course of the next half an hour, and I'll feel a bit more comfortable.
And if it did, in particular, if it closed below the weekly pivot there, or is that the daily pivot or the weekly?
That's the daily, yeah.
Daily pivot. So if you've got to close underneath that now, and a retest of either that or the trend line, then you're in business.
Yeah, then it would look better. Yeah. Yeah. So I'll leave that position on. The yen is the real one. I mean, this thing's just, it looks like it's on its way now, which is
actually, Paul, please ask the question that we should have addressed while you were on that. Is there, other than it was a great place to sell it, is there a reason why the market has suddenly bought the yen? But
no. The only sort of thing is, if you are an investor, if you're a speculator, you want to get out in front. There's no question. We've got CPI data today. It's not sort of any other data. It's today, but you want to get out in front, don't you? Because if you wait for that number to come out and that number is weak from the Eurozone, then by the time everybody else is in, you've missed a really good price. So at this stage, people look to me like they are anticipating that number. They don't know what it is, but they're anticipating that number. They're trying to pre-run that number. Now I say it's out today. The actual Eurozone CPI data is not out until tomorrow, but look at the German CPI, because there's some CPI from Germany today, which is out today, and I think that will probably sort of like set the tone of what's going to happen with the euro. So there's
Just like
the
PMI figures did last week.
Yeah, exactly, mate. Exactly. So that's one of the reasons, Paul P, is just that I think that there's speculation on what those numbers could be, and the price is, I mean, the price has been quite attractive for some time, but the price is very attractive at this particular stage because of the channel. You're looking at a long-term channel here, not a daily channel, not a 4-hour channel. This is a weekly channel that we've got kind of going on here, and we are right at the top end of it. It doesn't matter how you skew it. This is the highest point, and this is the highest point, and we were bang on top of it. So inevitably, there are orders sat here. So the price is the first thing. Now, sorry, you weren't asking about that. You're asking about the fundamentals. But my opinion is, and it's only an opinion because I haven't got a clue, but my opinion is that people will put their orders in because the price is so extreme, and then for this to get follow through, then it will be about data, CPI data, particularly from the Eurozone. Now, if you've got your order in the market at this high level, then you get some help from data. This thing goes. If the data doesn't move, all we've really got is a technical bounce, if you like, but a technical bounce down. If the data comes in and it's not particularly weak, this thing's going back up again, probably, or it's going to be stay in a range. But the anticipation of that data will probably keep this one suppressed now the bounce has happened. And then when we get it, then we'll see which direction it eventually will end up going in. But there's no guarantee of follow through at all. It's just that we know that is a strong area where there's a lot of there's a lot of orders sat there. Because remember, traders don't really do, or they don't do a lot in front of the charts anymore. They kind of pick their levels and then they walk away. And there was obviously a lot of orders sat there. We'll see where the rest of the orders sit.
I'll show you. Are you done with that?
Yes.
I'll show you the order I placed last week on this very same currency pair, which is very unusual for me, but I did. Actually, I'm being unusual, Jeff, this week as well. So on Friday or Thursday was the news, maybe Thursday, I can't remember. But daily chart. I decided that we'd have to sell euro yen on the premise, as I said, or as you've said, getting ahead of that news announcement last week, which was, what was that? Oh, it was the BOJ, right?
Yeah.
So where can I actually take advantage of this if they even hint that they're going to raise interest rates again? Well, I thought, I've got to be in the market before the news, right? I've just got to be, otherwise I could get slipped to hell and back. So I thought, right, I'll sell here. I'll just sell at market. Where am I going to put my stop loss? Well, it makes sense to put it at the absolute extreme, which was here.
Yeah. And
I thought, I'm going to have a bit of wriggle room. Let's go 150 pips above there. So I went 150 pips above there. Look where the stop loss is. I think it's pretty much where yours is at the moment. It must be very, very close. Where's your stop loss? I got 171.50.
Stop loss 171.80.
Right, you're a bit above me.
Yeah.
So the only reason I rethought, hang on a minute, this could take about 6 months, maybe 12 months to get down to here. How much is that going to cost me? That's going to cost me a chunk of dough.
Yeah.
To hold that position for so long.
Yeah.
So I said, nah, can't do that.
Yeah.
When
Is that
when
euro
it does,
yen?
that's euro
Yeah.
yen. Yeah.
Yeah.
So when it does do that, I'll pick it up and trade it on a daily basis because the cost of holding euro yen is really, really prohibitive. It's not good.
No, I mean it's a funny one, isn't it?
Short anyway. I mean, you gain if you're buying it, fine. But
Yeah, the yen is a funny one. It just it's a difficult one because you know they've got to do something, but they just don't seem to want to do it.
it appears that way. But
You know?
um, is it surprising to anybody that they don't do what conventional wisdom suggests that they should? And that's, I suppose, why I've got some sort of sympathy for them because I'm very much of that ilk myself. But they'll do it. But they'll do it when nobody is
Yeah,
waiting for it. Is
yeah,
waiting for it to happen.
yeah,
I've got no doubt about that. They'll,
yeah. True.
and I hope for your trade's sake that that's in a nice time frame, and not let this high bit taken out before they do. Um, it's hard to imagine that would be the case, but stranger things have happened.
Yeah, I think that's the point, isn't it? Is that because markets are, you just never know. You never know what's going to go on with markets, and because markets are like that, it's 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 not really for us to kind of attempt too much. I suppose we try and use the information that we have at hand. We try and make a decision, and we have to admit when we're wrong. And of course we hope that we're right, but we're trying to sort of be right more than we're wrong because we know that because the way the markets are structured, the likelihood that we're wrong is at least 50-50.
Yeah, and that's why we need an edge, so we can
That's why
actually
we need
sneak
an
above
edge.
that
Yeah,
at some stage.
yeah, yeah.
Paul, yen strength across all yen pairs. Yes, 100%. The reason that I chose euro yen, probably exactly the same as Ash, was it was at an extreme price. Absolutely, for me, the extreme was very, very clear because of this double top up here, and that's never been there before, to the best of my knowledge. So guess why I've got that red line there? Because that is fair price historically for euro yen, right? So that's my target. As I said, it could take 12 months, could take 18 months, could take 5 years to get there. And I don't know that I've got enough money to pay those swaps over that period of time. So that's why I chose not to take the position. But trading on a daily basis, I think is absolutely perfect if it does get this. And wow, who's going to argue? That's a double top now, right? And a massive double top.
Yeah, yeah, exactly. Well, I think that's the thing, isn't it? It's like, we look for these classic kind of we look for these classic chart formations all the time, and as you rightly say, mate, it is a double top. Um, and because we're on MT4, this specific broker, um, this specific broker puts its price at, I don't know where the high back in, what is that, 2006?
Yep.
I don't
The
know what the
price
price of that.
is 169.95. Let's call it 170, right?
So 170, right? Okay, so and that's pretty much where we've got to. But if you look across brokers, it'll be slightly different. It'll be something will be slightly more than 170, but we're in and
Sure.
around the area.
Yep. Who could argue? Not me, certainly.
Yeah.
What would I be waiting for? Um, a reversal pattern. Got it. Currently got it on the daily chart. That'll be a bearish engulfing, but shooting star, call it what you want. So next thing I need is Monday, Tuesday, Wednesday, Thursday, lower high. Then I can look to enter again, or I can look to enter full stop. But if I do that, what I will be doing, because I'm trading against the swaps, I'll be looking to actually take profit every single day and get out of the trade. That'll be my MO, if you like.
Yeah. Yeah. Yeah,
Talk
which
to
is
me
a great
about
way to
gold,
do it,
Ash.
actually,
Oh,
isn't it?
sorry.
Yeah, it's a great way to do it, actually. You know, close the position and then try and re-enter when the market reopens again.
Yeah, look, it's and I won't say it's rare that um, price just continues on the very next day at the very same price.
Yeah.
What I will say is often, I'll go with often you're going to get a little bit of a pullback as the market
Mm,
opens.
mm.
And that should give you an opportunity to get back into the trade. The only problem with that is the spreads. If you're up at that time of day, of course, the spreads can be a little bit prohibitive. So
Yes.
you might have to wait half an hour or so before you can actually place that order, in which time the market could have moved again. So
Yeah.
you do have to be alert to it to actually play that particular system or strategy. But I think it's well worth it at the end of the
Yeah.
day.
Yeah. Agreed.
Talk to me about gold, Ash. I'm a massive bear gold today.
Yeah, well, I'm not surprised actually. I think with gold, you know, I need to look into I need to download some data with gold really, but um, if the market last week seemed to be reacting off something of confidence, you know, with a degree of confidence, you look at the Nasdaq, you look at the FTSE particularly, but you look at the Nasdaq, you look at what happened with the yen, you look at what happened with the dollar. There was definitely some confidence kind of coming back into the market, and a lot of people have
Yep.
been holding the gold position because they are worried about, you know, global tensions and everything else. And of course, the monetary
Which frankly
system.
haven't really gone away. It's just that the perception seems to be we're in a nice little should I call it the eye of the storm when
Yeah,
everything's
well, do you
calm for
know,
the moment.
I find the retaliation from Israel to Iran very, very interesting. You know, the way they retaliated, as I said before, it seemed to me like more of a barge than a punch. You know, it seemed to me like there was like basically saying, you know what, we're still here, and we're going to show our citizens that we are. I'm not going to tolerate what you've done, but we won't exacerbate. We won't flare up by targeting anything that could actually escalate this situation. And I thought that was quite interesting the way they did that.
Mm-hmm.
It was almost like we will appease the West, and we will appease our people, and we'll make sure that we don't you know, do anything too inflammatory. So their response suggested that there would be some calm, and we don't know what the news sources going on in that particular part of the world are suggesting. But certainly from over here, as you quite rightly say, it's all gone a little bit quiet. Um, so now I think we just kind of assume that the market will react to that particular narrative. And that suggests some bearishness in gold. And you know, aside from anything else, the price looks to me like it needs to come back a bit. If we think about this on longer term timeframes, this is the daily, but you look at the weekly and the monthly, it's had a
But
pretty over.
it's a reasonable daily chart though that I'm looking at. I've got a double top and
Yeah,
a lower high at resistance.
yeah, for sure, for
Mm.
sure. I mean, but I suppose that, you know, when you look at that, that looks like a pretty over exuberant move to the upside, and that would suggest coming down to in and around where the monthly pivot is, you know, before it kind of settles again. So I'm not surprised you're bearish on gold. I think the difficult thing with gold is similar to going going bullish on the yen, is that you
Yeah.
know, traders' perception of things don't necessarily always match what the next logical move looks to be, you know, on the chart. And I think that that's the issue. But I can see why. I mean, I personally, I look at gold and think anything bearish would suggest to me that there's a better opportunity to buy at a better price. But you know, aside from that, I probably wouldn't be I wouldn't be participating.
Yeah, it's a tough thing to trade at the moment, I think.
Yeah,
But I'm always willing to trade the retracement on gold because it does do very, very technical things, I've noticed. And that looks extremely technical to me.
yeah.
But that said, had I traded it, I'd be in drawdown at the moment. I might have to look at that on the 4 hour chart actually. Not quite there for me, but yeah, I need to come below that to get in, I think now. We shall see. Oil is interesting.
Yeah.
Like I said
Yeah.
before, has come or snuck its way back into my my big rectangle, which is probably better on the weekly chart. But the daily looks like a nice head and shoulders. No, so does the weekly, to be fair.
Yeah. Yeah. I
And
agree with you on oil.
that's telling
And
me false break.
well, this is the
Oh
thing,
wait.
isn't it? I mean, if we think about what pushed the price of oil higher, that also seemed to be about the situation
Mm-hmm.
in the Middle East. So if we that looks like it's above on the weekly, but if that does get below last week's bar, that's going to look pretty bearish. And the reason for that is that we are kind of like in this situation where central banks, of course, are trying to fight inflation. What is causing the inflation? And if we're sort of like in this sort of this situation about people can't spend as much, but people won't do as much. People are in a situation where the higher interest rates are starting to really bite. Then of course they're going to use less energy. They're going to travel less. They're going to in any way, shape, or form. They are going to use less physical energy. Kind of food energy, and they will also use less energy to kind of like go and transport themselves to go and buy goods and services as well. So that would suggest that oil would come down. So if we think about it without the situation in the Middle East, then it would make sense to me that the price right now is probably more toppy than it is at the bottom end of the scale. And if and then we bring the Middle East thing back in, and if we suggest that that has calmed down somewhat, then I would also be a bit more bearish on oil right now as well.
Well, it's a setup there for me already.
Yeah.
I should be underneath that bar. I might have to do that. So, folks, when you talk to me or when I talk to you next Monday, I will probably have an order short underneath that bar, but I will put my stop loss up here above the swing.
Yeah,
No
that
question.
makes sense to me. And it also,
I want to mention one thing on oil.
yeah,
Did you see Leon's post in Telegram?
today?
Probably overnight.
No, I didn't.
Brilliant, absolutely brilliant. Can you just take the
Uh,
screen for a second, and I'll
sure.
bring that up. I'm pretty sure he wouldn't mind me sharing it.
No, I'm sure he wouldn't. Where are we at?
Cool. I'll just bring that up for the benefit of those of you. It was there anyway. Okay. I'll pinch it back, mate.
Yeah, great.
I think that's a fascinating chart that tells you how much influence, or I suppose that's the right word, well, let's call it demand by sector.
Mm,
And transport is in the blue, non-transport is in the gold, if you like. Passenger transport, 27%. So there, if you can put that into perspective, what you've just mentioned actually becomes far more relevant in terms of,
mm,
okay, how much influence is that going to have? Road freight surprises me, or aviation ship. If you add those two together, it's 27%. It's exactly the
mm,
same
mm,
as passenger, right?
mm.
They're the two that were very interesting over the COVID period, right, where the supply chain
Yeah,
was just completely blocked. Um, I think this is a fabulous chart
it is
because if you,
actually. I mean, that's from 2022, is it?
yes,
So that's a chart from 2022. Now, I wonder what the most recent. Well, I suppose that's demand by sector. So it's not actually telling you that. Now that is interesting. Now that is interesting because that
mm,
gives us something to look at. What that would then now the next sort of the next port of call would be how is the transport industry using what's the demand from the transport industry in this current period? How is it on week over week over week? are, from the passenger side, probably, first and foremost. But certainly from the transport side, is there somewhere we can find that kind of data? And I would suspect it's probably still from the from the IEA as well, the International Energy Administration. I would have thought that's going to be the same place that we can find that.
Yeah, for sure. You know what's one of the most interesting parts about this chart, and there are plenty of them, is this number here.
Power.
Yeah. I'm not sure what that actually means. Whether it's domestic power, whether it's global power, whether it's whatever it is. I find that fascinating. What does that mean?
That is interesting. That is interesting. You're right. But then I suppose if we think about the use of oil, it's not the same as gas. It's not like that oil doesn't really create domestic power for houses.
No, true.
So it might move the coal.
It's probably old, very old.
Yeah.
Where you have oil burners, yeah.
Yeah,
and
exactly.
That's telling us that as well.
Yeah, exactly. So it's not the same, and I suppose we'd have to look at also probably how gas is going, how natural gas is going. But you're right, it's the transportation which is the interesting thing. Now, of course, when people buy less, then they won't need to, regardless of the passengers, they won't need to transport as many goods from one side of the globe to the other. So that's another factor that we need to take into account. Now, the way that I kind of would lead myself into finding out what's going on there is I would think about how's the consumer, what's consumer sentiment. If you look at University of Michigan consumer sentiment, it is under its trend. I think the last report was 74, and I think that they tend to, if you look at the average over the last 10 to 15 years, it's around about 90. So we are kind of under the consumer kind of confidence numbers from that one particular report. So that tends to kind of like then lead through to demand of of retail sales and other goods and services. So we are kind of pointing to some weakness. We are pointing to some areas of slowdown, unquestionably. It's just, I think that the economy is, because the economy, and you look at manufacturing is on the floor pretty much. It's just the services sector globally has just been booming. And
we saw that last week, didn't we? All the services PMIs were up, all the manufacturing was down.
And this is the kind of the conflicting kind of data that we've got, and it's just a disparity between one sort of side of the economy to the other side of the economy, and we're not kind of getting this equal, which we never do, of course. You look at the S&P, it's case in point. There's not equal distribution between every single company. There's not equal distribution between every sector in every country. So that gives us the challenge of how we kind of sift through the data and how we find out what we need to find out. But this is, you're right, mate. This is interesting. Yeah,
that is interesting for that reason. It's not necessarily telling you the whole story, but I think it's food for thought, and it should lead you into this area that you just suggested. The IEA may well be worth looking at. Okay, what does that mean if this demand drops? What does that mean if this demand increases, etc., etc.? I think it's a great pie chart. Anyway.
Yeah, I agree, mate. The IEA, sorry, I named them wrong. It's the International Energy Agency. So anybody wants to look that up, it's something to check out. Not the easiest website to navigate. I'm on it right now.
Anyway,
it's going to take a while.
I'm a bear oiled and I'm bear gold. That's the upshot of all of that.
Yeah, like it. Okay, mate.
What else we got, mate? Or are we out of here?
I think we're out of here. We obviously are reliant on the two of us right now, which is cool, and we're all good with everything. And if anybody else has got any other comments and charts they want us to look at, of course we will. But I think that
actually,
go on, mate.
Whilst they're thinking about that, there's one thing that we didn't chat about, and we've been chatting about it for the last 12 months, maybe even, is CAD Swiss.
Yes.
I should have a chart of that somewhere. CAD Swiss.
Yeah, well, while you're sort of about to bring the chart up, I'll tell you the background data. So the Canadian dollar is pretty bullish when it comes down to COT data. The CAD, sorry, the CAD is very bullish when it comes down to COT data because of the extremities. Swissy pretty much the same, if not even more bullish actually when it comes down to the COT data. So one cancels other in that fact. But if we look at, so we're not going to look at it because I have to get it from a external sort of area. But if I have a quick look and let you know what the seasonal sort of data suggests coming into May, we're looking sort of like over 25 years, pretty flat. If anything, the CAD is slightly more bullish. So actually, one cancels other with that. When I look at that, that would suggest to me that we may well hit a bit of a range. If we look at the background data, we may well hit a range, and because of that, that would suggest that we're at resistance, and this should really be a sell at this particular point.
Yeah, I'm not seeing that from a technical point of view, I've got to say. I think we're through the resistance that's going to be a problem.
You see, I've got, when I look at the weekly,
yeah.
Oh, you're on the weekly. Okay. And then I've drawn a trend line from the January the 8th. The high in that.
Which is here somewhere, right?
No, lower down. You got about 4 swings to go. Next one down. Next one down. Next one down. One more down.
Here.
There. Yeah. And then extrapolating that out to the high of that bar that you've, there. You see that looks to me like a pretty good area for a bounce. Some pretty tight touches there.
Yeah, okay, I see what you're saying. And the one thing that does disturb me here, of course, is the high test bar and the low test bar. But I do like the fact that it's bouncing off the monthly pivot. Bounce.
Yeah.
It looks so skippy to me.
Yeah, so, and it's opened well this morning, isn't it? Oh no, sorry, that was last week's bar, wasn't it?
Well, it's actually pulled back, which I think is a fantastic thing.
Yeah.
To this level, I think it's a buy here myself.
Difficult though, isn't it, mate? Because all the case that you've made about the CAD, potentially sort of struggling because of oil and everything else. It makes it harder. Makes it harder, a harder one to kind of go for.
The Swissies as weak as Lollywood. That's the thing.
Yeah.
And we appear to be risk on at the moment. So
yes. True enough.
That's in favour of that particular pair, if you like.
Yeah.
I guess we'll know by this time next week, mate, what exactly was right and what was wrong.
Yeah. Sounds good, mate. All right, well let's get out of here. Yeah.
Euro yen short, right?
Euro yen short, yeah, and I'll sell it a few times if it pops up.
Okay, I'm Aussie Swiss long, Kiwi CAD short.
Sounds good.
See how they pan out.
Sounds good, mate.
All right, 1800 in my neck of the woods. That means it's 1 o'clock, and I might. Oh, actually, I've got another session shortly. No, I might have one. See how I go. Have a great week, mate.
You too, buddy. You too. Good to speak to you.
Thanks, Paul P. You have a great week too, and thank you for being our trading buddies. It is May coming up, and Ash reckons selling May might be just a little bit early. We'll see.
Yeah, we might see it this year.
Week.
Yeah.
Sorry?
We might see it this year.
Oh, okay. Actually, yeah, I'm in favour of that. And I've got to say, S&P 500 has just come back to retest this area.
Yeah.
Might be a sell tomorrow for me.
I agree with you, mate, on that. In fact, we didn't talk about those, but very briefly, I would agree with you on the S&P. Earnings have been pretty good from some of those cloud-based companies, like Microsoft and the like. So that has enabled this one to survive. But Fed on Thursday, we got Wednesday, Thursday.
Yeah.
That could really kind of shape this market.
Yeah, that's going to be the flavour of the week, isn't it?
Mm.
Negotiating ourselves around that may well be the art form that we need to adopt. We'll see.
Yeah. Yeah.
Thank you, Linda. Thank you, Paul P. Have a great week, everybody. Thanks for being our trading buddies. We'll catch you next Monday. Bye-bye for now. See you, mate.
See you, buddy. Bye, guys.